Good afternoon from Singapore. Welcome to Radio Finance. This is Chng, your host and moderator for the next 30 minutes. Our topic for today is dealing with fraud during COVID-19. I'm pleased to introduce my co-host today, the managing editor of the Asian Banker, Boon. So, Richard, let me turn to you. You are our cybercrime expert. What has been the impact of COVID-19 on the financial scene today? So how has the shift towards digital transactions created vulnerabilities and security risks that criminals can exploit?
We see that, for instance, a lot of folks who are doing cash-based money laundering using Hawala, which is kind of very prevalent in this region. They've been actually forced up into more digital channels, which one kind of exposes them. But I think what we're seeing as well is that you're getting a lot of new digital bank accounts that you didn't previously see. And I think that in itself, so kind of given the fact that we have different types of criminal activity out there, there is a need to definitely innovate. Both the challenge is a lot of kind of mainstream banks hadn't traditionally done that previously. It was always a requirement to have the person come in, sit down, and you kind of go through their details to see them. Now it's a lot of banks, I think, are going to be caught out and having to retool so that they can almost operate similar to some of these new age banks like the Revoluts or the crypto exchanges, doing the whole thing electronically. So, and being able to do that quickly, that would probably expose some kinds of gaps. Because if it's something that's not kind of in your DNA.
Can I just turn to Roeland and ask you, what are the emerging trends you see, specifically in areas like identity and data theft and money laundering and payment fraud?
What we already saw in criminals, that they were more and more getting interested in digital actions and dealing with digital crime. I mean, this goes back like 10 years even, where we had our top tier criminals in jail. That I want to pivot from violent crime to cybercrime because it's easier to make money. So already that incentive existed, and one often overlooked group in this are kids, I have to say. Especially in countries like mine and also like Singapore, where there's a lot of digital tools available, and kids might be a little bit bored after school. They tend to experiment online, and they tend to sometimes do things that are technically cybercrimes. And what we're doing in the Netherlands is that we actually devised a whole program as the Dutch National Police for kids who want to kind of try their own hacking skills and do it in a way where they don't commit any crime. So that's an additional benefit, because actually honing their IT skills and then hopefully still being able to use those for the good of society later on. Now, when we talk about types of crime, as an example, what we're seeing in the Netherlands is that your WhatsApp-related media phone scam, the WhatsApp scam and fraud, has tripled as compared to a year ago. So we're seeing 3 times as many people filing police reports about the type of crimes being defrauded in that. And our friends at Europol, the European law enforcement collaboration agency, they figured that they're seeing around 120,000 new websites that are related to COVID. So that's quite a growth. And finally, we already saw some statistics about ransomware and other types of blackmail. There's actually people being threatened through digital means with the virus. People saying, if you pay me a Bitcoin, I will infect you or your family. So that's quite terrible. I mean, some people might be a little bit susceptible to that, and they must be living in fear just because people think this is an easy way to make money. We actually had some cases in the UK where there's some apps where it's quite easy if you know like the access code to join a conversation. And it was a case of a journalist from the Financial Times who actually listened into their competitors' meetings that way. And I noticed just now in the poll that actually people are quite worried about account takeover and hacking into transactions, etc.
Thank you, Roland. You mentioned about this emerging trends of kids who are bored at home and trying their hands at hacking. Now, to law enforcement and for financial crime departments of banks, how worrisome is this? What are the chances of them being recruited by bigger crime syndicates?
It's an important point that you're making. So obviously, just randomly brute forcing accounts nowadays, where most banks fortunately have two-factor authentication in place, that isn't the big issue. In Asia we see a little bit more defacements, I would say. Here in Europe and especially in the Netherlands, we still have kids who think it's really cool, and it's also relatively easy, of course, to DDoS organizations, just to and not even make a statement, but just to see, oh wow, the whole country is being annoyed by this, and I'm doing this. I personally don't consider that to be, a hacking skill, but it is a type of cybercrime. It is something we got to deal with. And finally, your point about being recruited. Yes, I actually I have a colleague, younger colleague, who has a friend, etc., and they were once, having a drink, and the friend actually had received an offer from, somebody who said, "Oh, I like that you're very able to, you're very skilled at working BlackBerries and programming apps for them, and would you not be interested in programming a very security tight app for the BlackBerry so that we can communicate very securely?" He decided not to do that. Years after this had happened for this specific kid, we actually found a whole gang who were dealing in these so-called black phones. And the people who are providing the services, more importantly, for them, as soon as the operation was, came to the attention of the police, and we arrested some of them, and the criminals found out that, oh wow, my data might not be fully secure there. This just goes to show that your point is very valid. That if you let the criminals into your life, they might take it over.
I'd like to have follow-up questions to Richard's earlier point about institutions today, as crime is moving to the cyberspace, to digital. There's a need to retool and to reskills, right? And also in terms of new form of players coming into the market, it also opens up greater vulnerability because they're not traditional, right? If you are traditional banks, AML compliance, KYC is bread and butter. To the newer institutions, it's all about customer experience, having to balance experience with security. How are you dealing with that? And where do you see in terms of the regulator expectation between incumbent players and new players? Is it a level playing field when it comes to security?
I think a lot of the regulators are actually being quite cooperative and providing some pretty good guidance. The good thing, I guess, in Singapore, for instance, things like, eKYC, kind of not having kind of remote KYC or meeting the requirement to meet your customer is kind of been waived. So it's a framework is always being in place. So I think some banks have been prepared for that. I think in a lot of countries, that's not the case. They were always needing to meet the person. Now they have to kind of scramble and put in place the means to do kind of contactless KYC. The other thing that they're going to struggle with in the KYC side is the fact that there are new topologies popping up with relation to COVID. And that means you're going to have to be in a position to detect those. And that is something that's kind of difficult for a lot of institutions to do. And you also have a large bureaucratic process as well, sign-offs. So as the criminals retool and you get a whole flood of new topologies coming from various bodies like, European Banking Association, are putting some of these out. A lot of the law enforcement agencies are putting these out as well. I think it's very difficult for banks to keep up with that.
Right. So, Anzar, you work in an interesting environment in Indonesia. Now, with social distancing and lockdown, you have closed down some branches. There are lesser physical cash transactions today. I mean, the mainstay of money laundering in some of the emerging markets are really physical transaction and physical movement of cash. How has the financial criminals been moving their cash amid COVID-19?
In some banks, also they already close some branches, especially in Jakarta. For my bank as well, we in Jakarta only open for 30% of our branches, but in out of Jakarta, it's about 40 or 50% only branches who open the operations. And for the financial criminals right now, there's I think it's not really different when they are doing the crime moving their money, because they give what's that, services like a mobile banking, internet banking, and also in these situations when there are the limitation for them to come to the branch to make a transaction. So some banks make a relaxation for them to do the transaction. The limit for mobile banking, let's say, is only 100 million rupiah per day for the doing remittance. But some banks right now they're relaxing the limit, becoming 200 or until 400 million rupiah per day for mobile banking. It means for the criminals, they still can move their the money which is produced from the criminals by using the internet banking or mobile banking. I think I trust banks in Indonesia already implement EML system as well, such as in my bank we can trace the transaction. Also maybe large transaction, rapid movement, we can catch them, but it is quite challenging. It's quite challenging for us to see the transaction.
And we'd like to also now invite Michelle to join the conversation. Based on GBG experiences in working with banks around the world, can you share how are they preparing themselves? And in the context of COVID-19, how are your banking clients responding to the crisis?
So from a financial crime manager perspective, there's really four key things that our customers are preparing themselves for today. And I think the challenge for fraud managers today is to really predict and pinpoint what's going to come up next, and make sure that they've got countermeasure defense ready for that. There's going to be an increase in misused identities in the form of identity theft, first-party fraud, synthetic identity fraud, and mule accounts.
Yeah.
The second area that kind of relates to the new and emerging threats is the alternative revenue streams. So we are seeing businesses pivoting to meet the changing consumer behaviours, the move to digital and mobile, and to become creative and open up new revenue streams. And the challenge for fraud managers is that they need to support this business pivot. They need to be able to onboard customers and support the new business revenue streams in a safe and compliant way. The third and fourth one are actually being considered right now, and the fact that customer behaviours have changed. So if you take card fraud or card transactions, for example, it's all moved online. We're at home, we're doing at-home purchases. There's a lot of card not present, and we're not doing the traditional overseas transactions and so on. So what this means is that the fraud operations teams need to go and recalibrate all of those detection models, the machine learning models that are based on behavior deviations. And in particular, it's really important for the fraud operations and investigations teams who are now working remotely to have models recalibrated and alerts refashioned based on those remote working practices. So some of the tips and how can we deal with these sort of changing operational considerations. The point out here is that it's great news that the fraud managers have got some great capabilities and technologies available to leverage to help them optimize their operations, these things. Now that we have moved to digital and mobile banking offerings, we can use and leverage this data. We can enrich customer onboarding, for example, with mobile and device attributes to make more informed fraud decisioning. And we can use analytics to really understand that customer's persona. And we can look at the data within the consistency to really make that accurate decision about that customer in a lightning speed way. So with technology now, we can layer it, and we can customize the detection capabilities on the customer. Operations are now putting a customer at the center of their at the center of everything, really, and making sure that customer experience is great, but they're also protecting the customer and maintaining compliance for the bank. So I've got an example here of a customer, and he's making a loan application via a newly launched mobile loan service. Now, because he's an underbanked customer, it means that there may not be a rich credit history and lots of data attributes available to be able to assess him for credit and fraud risk. But through enriching his application with this data that I talked about before and layering the different defense around the customer needs, the fraud team can then actually support the business strategy of going mobile. So they might actually want to re-look at him in a different way, which might enable the bank to onboard this customer, offer him a loan, but do it in a protecting and safe way. So here's an example of result that I talked about earlier. And if you just look at that application data, you'd probably say, no, we'll probably reject it. We don't have enough information available. There isn't a credit file there. And we can't match it against enough information. But hey, look, if we can layer in additional data such as the device information, the social information, the email information, how long has he had this email for? Is this email connected to social media connections? We can start building up a better fraud risk assessment. There's other ways of looking at credit risk as well for underbanked customers. So we can now start using mobile metadata to look at things around how creditworthy this customer is. So if we start looking at additional data, we might actually offer this chat result a loan. But because we don't have as much information, we might want to lower the loan amount, and we might want to put him on an enhanced activity monitoring list. So by doing this, we can onboard a good customer in a safe and secure way. And we can make sure they've got a really good customer experience, but then also support the business as they're pivoting towards different revenue streams.
So you're using mobile data to further enhance risk assessment of customers. But at the same time, we hear of some of this criminals cloning some of this information on their mobile phone. The balance between risk assessment and customer acquisition and so on and so forth.
Yeah, sure. So in terms of how do you strike the balance, I think that the key thing really is to ensure that you've got enough data points and layering them in and having a flexible approach to how you're risk decisioning a customer, because there isn't one fail-safe silver bullet available out there. You really do need to look at different attributes and combine them together to get an accurate risk assessment. And so it's really important for technology to really have that capability to be real-time and instantaneous. And there's two key things that are absolutely critical for technology in this space. The first thing is scalability, to be able to handle these vast amounts of data that we've got available. We are bringing in digital, we're bringing in device, customer, application, transactional data attributes. The second thing is we're now looking at an omni-channel approach to management. It's not just looking at one channel. So scalability and flexibility is absolutely imperative in a real-time mode.
Roeland, for a long time in Singapore, a few years ago, there was a reluctance to share information among institutions, threat information or attack information. But you set up the Cyber Fusion Center in Singapore. It's a private-public initiative Did you find that the trends have changed and people are more interested in collaborating to fight cybercrime?
So when I was in Singapore, it was mainly to do with the fight against cybercrime, working together with private industry. We had collaboration agreements with Kaspersky Lab, McAfee, NEC Corporation, for example. And what they did is they actually, Interpol is staffed by hiring staff, but also by people who are seconded from law enforcement. And what we added to that was that actually companies could second somebody to Interpol, and they would have quite a specific role in that. They would be, not well. I mean, they would be part of the team, and actually there would be like certain meetings and certain types of police information that they were naturally not allowed to see. At the same time, building on that, we wanted to expand and to also add financial institutions. So I think that Barclays was one of the first banks actually to also join this this unique situation that looks specifically at threat intel, threat information that can be safely worked up to information that police internationally can use to combat crimes. But from building on that, I remember some meetings we had where we actually invited most of the Singapore banks to see if they, what their branches and their regulations would allow them to do. And the issue with that is that Singapore is just quite strict on its laws, I would say, against getting market dominance for one of the banks. I think that's one of the things that plays into that. And actually, Interpol organizing these meetings and just putting all these banks on the table together allowed for them to have a conversation about security and to at least not compete on that, because it's in everybody's interest to exchange this type of information. And this kind of brings me to what we have in the Netherlands, where we have a similar situation. We have a few big banks that are not allowed to make a lot of agreements amongst themselves, but they also have an incentive not to compete on matters of security. And what we found was that, there was a risk that individual banks would not go to the police when they had like a hacking case or something, because then, 1 or 2 years later, maybe there would be a news article and people would say, oh, that bank got hacked, whereas actually the threat is real for all of them. So what we did is we devised the Electronic Crimes Task Force, and our minister, the Minister of Justice and Security, he signed off on it, and they made like what we call a covenant. So it means that you can exchange more information than you're maybe normally allowed to for this specific purpose.
Right. So it's the sharing of the information, of threat information, that is important, right?
It is, and if I can add like a final semi-institution that works very well for the Netherlands, especially now in this time of crisis, it's what we call the Information Sharing Analysis Center, or ISACs. And with us, it's our anti-crisis and anti-terrorism agency that is actually coordinating for all the what we call vital infrastructure sectors. To come together per sector, if you will. So the energy companies, or the telecom companies, or the financial industry. And each of them will have regular meetings of their CIOs and CISOs, and specifically to share information that they can share either on like a level where it can be shared onward to other sectors, but sometimes even what we call through the traffic light protocol information, where you actually this in the back of your head. You go back to your organization and just see, okay, let's just see if we have the same problem. And of course, officially, we're still, it's a time of crisis now, and we see these type of software networks that are built on trust. They are working quite well and quite effectively to combat different, also COVID-related cyber threat vectors.
Anzar, in Indonesia, maybe you can tell us whether there is a sharing of information among the banks and financial institutions and with the cybersecurity companies. What is the situation there in Indonesia?
Yes, in Indonesia, we are on the way to implement for the public-private partnership, especially for the intelligence, yeah, because right now for the sharing information, we still have the regulation for the Secrecy Act, where there's every information of the customer and information of their saving is secret. Is a secret for everyone. But right now in 2019, actually, our OJK, they already issued the regulation, the revision for the regulation for the EML and CFT implementation. There is the regulation for information sharing between between the conglomerations. So they can share the information for the customer due diligence implementation between conglomerations. Let's say in Bank Mandiri, we have 12 subsidiaries. We are trying to manage what kind of the information we can share to our subsidiaries. But to other bank, if we have item or issues that we need to discuss or we need to information from other banks, we can discuss in working group within the compliance director forums. I think in the future we need the public-private partnership because it will connect between the police, let's say for FIU, banks, private sectors, or every reporting parties that we need to implement for the MLCRT.
Richard, could you talk us through the challenges that a global bank like Barclays faces in managing evolving regulations? Sharing of information for one differs from country to country.
Yeah, no, as far as data sharing, a lot of banks are reluctant to do that. Places like Singapore, Hong Kong have very strict expectations around like personal information, and that's because they have a very strong private banking industry. But what they do is within the Singapore public-private partnership is they provide the topologies. The big challenges of doing that, I think a lot of the traditional banks have fairly, I guess, static type systems. It's very difficult to change these rapidly and add new topologies in on a regular basis. But I think there are examples with some of the kind of the fintech and tech fins out there that actually do manage this quite well. They use data analytics that can take in all of the streams such as sanctions trading, transaction monitoring, adverse news media. They can just take all that data in and they can create an assessment on the back of that. And it's all digitized, it's very quick, it's cheap, and it's very flexible. And sometimes it doesn't even require rules engine. They have an AI element to it. And I think that is the direction that banks are going to have to go into.
We'd like to get Michelle into the conversation. Managing financial crime requires a more integrated approach across strategy, data process, technology. Yet, as Richard said, most institutions operate according to our functional silos. How can institutions build stronger and more integrated response? And as Richard mentioned, more agile response.
Over the past few years, I've seen a convergence across those silos, actually. So if we're talking about AML, info security, fraud, I really have seen a convergence, particularly on the AML and fraud space over the past few years with the setting up of financial crime centres of excellence and so on. More recently, I'm seeing a real convergence, particularly in the InfoSec and fraud side. And because we are seeing the perpetration of cyber-enabled fraud, there is a necessary need there to bring them together. And if you can share cyber threat intel with your fraud defense mechanism, you can then move further up the fraud value chain. So you can start identifying precursors to fraud before it happens, so that you can stop it from occurring, protect your customers, and stop fraud losses from being incurred by the bank, for example. So yeah, there's a real need there. It's happening, and there's obvious business benefits to it, particularly in the digi space.
So essentially, is there a difference in terms of how banks cooperate, or this public-private partnership, right, in terms of sharing of information? Is there a difference between sharing information security, intelligence information versus actual fraud details?
So if we look at the banking sector in particular, where I focus on, there is a lot of information sharing. It happens formally, but it also happens quite formally as well. So GPG, for example, provides shared fraud insights and identity verification solutions, which are federated, where we are providing insights across the industry. There's a lot of reporting to regulators, as Anzar shared before, from an AML compliance perspective, and insights being shared back out. So that collaboration and insights is going on at various different levels within the industry and within organizations as well.
Starting with Richard, how can the effective application of technology such as AI, machine learning, data sciences build stronger intelligence-based defense against financial crime?
I guess the big change, and it's a necessary change that's coming through, is to be able to use technology such as things like machine learning, but also things like entity resolution, network analytics, being able to go through larger amounts of data than what is done today, and looking at all of the data at the same time. And that contrasts to what I guess a lot of banks do. The KYC checks, one guy looks at adverse news media, another guy looks at sanctions, first level screening, somebody else looks at, tries to validate the source of funds, and it's a very lengthy process. But if you could take in all of the information that you need to build a risk profile for a customer at once, so take all these silos, put them into, funnel it all into one system, and then you can use data analytics across all of the different sources, and then that should be able to give you a very comprehensive view with a reduction in the ever-present positives. And that would be also backed up with kind of electronic KYC systems.
Are there opportunities there to leverage of a fintech, especially now with new technology architecture, right? So in terms of what have we now with open banking APIs and whatnot?
Whether it's fintech or regtech, following some of the fintech examples, how some banks, I guess, are doing that, I guess, fairly cleverly. I can name drop one, is like DBS, for instance. They simply buy these some of these fintechs. Now we're retooled. We can think like a kind of a small bank with that particular area, and we've also got some really good sort of compliance processes that we can build off the back of that. And so I think that is what if banks want, the traditional banks want to survive, they got to do something like that. They got to start buying up some of these fintechs and the regtechs as well.
And your thought on this, for Bank Mandiri, how are you addressing the technology that is required to give you a few steps ahead of the financial criminals in terms of integrating data across the organization?
Data is very important, because so that's why we are trying to build a database in our bank, so we can use the data analytic between our data in Bank Mandiri as well as in our data with our subsidiaries. So we will know how is the risk of our customer when they are on board to our subsidiaries, vice versa, something like that as well.
Are you working more with regtech and fintech as well? Are there acquisition opportunity or targets?
So far, yes, and also for we are using the regtech and fintech as well, because we are getting to the technology era right now. We give a product as well with the online onboarding, so the customer don't need to come into the branch to open the account. They just use their mobile phone and they can open the account. But still, the steps for the customer identification process, QYC, everything, and online we screen everything, and we use the EML also to manage the transaction. So we still can monitor them even though using the technology.
Okay, and final question to Michelle. So as Richard mentioned, a lot of this enabling technology is there, but the issue for some of the incumbent banks is not just in terms of voting a new system or solution. It's more to do with the whole organization, internal structure, and also that a much talk about legacy system, right? So which kind of sometimes constricts what you can do on the technology side. So is the more viable option looking at a fintech, possibly writing off the capability of a fintech or regtech, and onboarding the technology onto their existing system.
Yeah, I think technology, as a technology vendor, I'd say this, but it has a huge in supporting financial crime. And so if you take machine learning, for example, that's been used a number of years around detecting fraud and financial crime. And it really does help you trawl through those vast amounts of data that we're seeing today and find that needle in the haystack.
Yes.
But it's a silver bullet, and that's why I think it's really important that as an organisation you do have a lot of tools available to you that you can pick and choose from within your ecosystem, depending on the type of customer, the type of modus operandi, the policy, the business strategy, product, and so that you can really tailor it to your needs. And I think it's really important to not forget about the human factor involved in all of this, and that the technology is really only as good as the humans that are implementing it, that are configuring it, optimizing it, and tuning it. You can't just leave it and set and forget and expect it to do something. On the flip side, there needs to be humans that are operating these systems and looking at the intelligence that comes out of it and doing something with it. And humans really are, the investigators and the triage analysts are such an important part of that chain as well. So it really is an ecosystem approach that needs to be brought together to fight fraud and financial crime.
In the past 1 hour, we've discussed how financial crimes has evolved. New crime typology that's emerging. There's an increase, for example, from traditional typology to more digital ones that prey on current vulnerability. Financial services has become more digital, yes, enable greater customer convenience, but at the same time also enable cyber criminals to also exploit some of the vulnerabilities. Regulators do have a role to play in terms of facilitating, encouraging more sharing of intelligence. Already today's regulation requires regulatory reporting when it comes to fraud, when it comes to AML, and so on and so forth. Sharing of crime typology, for example, but obviously much more can be done. There is also the need for technology today in terms of data analytics, artificial intelligence, machine learning that can sift through all the data within the organization that can reveal and help detect patterns of criminal customer behavior that can identify fraud or financial threat. So these are some of the things that we discussed.
Well, thank you very much to our 4 experts. We are grateful for your insights and for your time. We also appreciate all the listeners who are here with us and taking part in our polls. We hope to stay in touch with all of you and do look up for the next Radio Finance episode. Thank you.